To discuss Milltrust International's Emerging Markets Managed Accounts platform, I'm joined now by the group's Chief Executive, Simon Hopkins, and by the Head of Investment Solutions, Eric Anderson. Simon, if I could come to you first. Most groups offer a global emerging markets fund to investors. You offer a platform of managed accounts. Why?
Emerging markets are dominated by a very small number of huge international asset managers, and typically they'll have one fund, and that single fund will invest across all of the markets which today make up 50% or more of global GDP. We think that the world of investment management deserves a more sophisticated approach where you can select the constituent managers that make up the global emerging markets landscape. You can allocate those in accordance with your own views, or indeed you can use the views of our investment solutions business. We've structured these managers as UCITS, which seems to be enormously important for investors today. They're transparent, they're liquid, and they're safe because your money never leaves the custody of the world's largest custody bank, State Street, with whom we work.
Eric, a lot of people look at the emerging markets as a sort of homogeneous asset class, a place to have a bit of diversification, a bit of a risk-on play. How do you see it?
Well, you should certainly have an emerging market bucket, given the importance of EM in the world today. However, low correlations, diverging economies make it increasingly inappropriate to classify it as a single uniform asset class. The countries can differ in their stage of development, their structural hurdles they face, even monetary policy, which is often a function of the inflationary environment. Some countries are operating above their target inflation, others are below, and future policy will be dictated by that. And if you look at consumer behavior, corporate profitability, sentiment, these are often affected by these country factors. So it's unsurprising that stock market performance would diverge between these countries. And so in our opinion, tilting the portfolio towards more favorable economies is a better way to invest.
Given all this diversity, how's your approach different from a typical global emerging markets fund?
Well, typically, on average, people follow a market cap weighted approach. Now, the problem in EM is that the size of the market can be very different than the size of the economy. In fact, the majority of EM countries still only represent 50%, their market size only represents 50% of the size of their economy. So what does that say? That highlights the market maturity, but also, more importantly, it shows the potential future growth of these markets. And as an investor, you certainly want to be exposed to that future growth. If, for instance, you had invested in a GDP-weighted approach for the last 15 or 20 years, you would have significantly outperformed a market cap-weighted approach. Now, the Milltrust way is a bit more sophisticated than just looking at GDP numbers, but it goes to show that even a simple adjustment to the way you weight to emerging markets goes a long way.
How does this approach affect the way you've put the EMMA platform together?
The platform offers two sources of alpha. One from the top down, by being able to differentiate and capture that country factor across the different regions and countries, but also the bottom up, by investing into our locally based regional managers. And combining these two, we end up having a true EM portfolio that represents both the economies and the opportunity sets.
And is this an approach that outperforms in rising or falling markets?
Well, by overweighting and underweighting favorable economies, you are navigating the volatility, the global flows, the different risk parameters that we're faced in emerging markets.
Well, you mentioned a track record since 2012, but what have you done in 2015, which has got to have been the crunch year?
We've actually managed to preserve our clients' capital, and in doing so, we managed to outperform the indices and be in the top of our peer group. But what's important here is our approach allows us to navigate away from the big headwinds facing Brazil, Latin America, various parts of Asia, who are suffering in this environment, but also for our local teams to pick off benchmark companies, to invest in the companies that are not affected by the ETF flows and the risk off. So really, a good test for our approach is these markets, and we've outperformed.
Final question, Simon Hopkins. How are you looking to develop the EMMA platform in the future?
That's a very good question. We invest across 32 markets using the managers that we currently have on the platform. We intend to expand that. We're going to add Korea, Turkey, MENA, over the course of the next few months, which is very exciting development for our business. Those will all be structured as UCITS funds on the platform, and we'll be moving towards 100% coverage of the global emerging market opportunity set.
Simon Hopkins, Eric Anderson, thank you very much.
Thank you
Thank
very
you.
much.